Hello everyone, welcome and thank you for watching the Market Report. We air every Tuesday, 12 o'clock p.m. Eastern Time on Cointelegraph Markets and Research YouTube channel. On today's show, sponsored by XGO, we'll be covering Binance and CZ, Elon Musk and Twitter, and regulation, especially in Japan. Our first news, written by William Suberg, covers a false rumor that claimed that CZ, the founder and CEO of Binance Exchange, was wanted by the Interpol. So Bitcoin price bounces after CZ arrest rumors as traders eye 30K next. Bitcoin price action performs a classic sweep of the lows, with Bitcoin on track to tackle the 30,000 mark once again. So, in its lowest since March 28, the performance followed an outbreak of claims that Binance CEO Changpeng Zhao, CZ, was under investigation by the United States regulation and now wanted by the Interpol. The claims came from an accidental leak of an encrypted tweet by private Twitter account Kobe, which appeared to lack evidence, resulting in a market rebound. So I'm gonna zoom the chart over here. So that's the point. We've dropped from 2,800 to 27,200, so almost $1,000 due to an unfounded rumor. But you can see that as soon as the market noticed that it lacked evidence, Bitcoin price recovered. So yes, Bitcoin price plunged almost $1,000 in less than 2 hours, solely based on false rumors, which was amplified after a certain crypto news outlet rushed to print the story without a minimal due diligence. But more importantly, the 28,000 level was reclaimed in less than 9 hours, proving the market resilience. So the article goes on by saying, Van de Poppe additionally referenced the macroeconomic climate, specifically the potential end to interest rate hikes by the US Federal Reserve. Trend remains to be upwards as we're in a vacuum of relief as the hiking process comes to an end. So what's Michael saying over here? The Federal Reserve has been raising interest rates since the middle of 2022. He has been doing that to try to curb inflation. But by doing that, he's also creating recession, because a higher cost of capital means that companies and families and individuals can no longer borrow money at 2% and invest in something, either it's a business or market that returns 5 to 6% per year. If the cost of capital increases to 5 or 6%, then all of those investments become non-profitable. So they have to shut down. So that's why companies are laying off people. That's why there's less consumption. That's why banks are going under, because they did investments that made sense during a period of 2% interest rates or lower, but does not make sense if the interest rates are 5% or going higher. So that's what's causing the crisis, and that's what Michael Van de Poppe is pointing out here. So we're in a process of the US Federal Reserve reverting the trend. So maybe he's not going to lower the interest rates right now, but he's not going to make them higher any further. And that's positive for risk markets, including cryptocurrencies. Michael then adds, most likely we'll see Bitcoin continue to 40K, but we'll be having a test. If we'll be having a test of 25K first, I'll be a buyer. So I completely agree with Michael over here. There's some chance of a 25K retest but that will be an excellent entry point. So if you've been sitting on the sideways, if you lost the bull run, don't wait for a retest of 20K because most likely it won't happen. But a 55K correction will be healthy and really feasible to happen. And that's a perfect entry point if you have been sitting sideways. So William Surberg's article goes on to cover the DXY index, the dollar strength. So the dollar measured against a basket of other fiat currencies. The OPEC, the oil producers country, they cut the production during the weekend by 500,000 barrels per day. And that caught the United States off guard because the US has been consistently reducing oil reserves to curb inflationary pressure. So instead of the companies buying and importing oil, the US has been selling at cheap prices their own reserves. So if the oil prices continue to rise, they will have to some point in time going to have to buy it back. And buying back at a higher price, it's going to be worse for the US. So that's why the DXY index went down. And we went down to 102, so the lowest level in a couple of weeks. We're going to see the chart over here. On the macro front, chains were also afoot with the weekend announcement of the oil production cut, combined with weak US economic data. So here's the chart of the DXY index. You can see that in the early March, it went above 105. And for the past 3 weeks, it has been trending down and it's currently below 102. So that's a weak US dollar. The US dollar is devaluing, is losing value against the other global foreign fiat currencies. So the big question is highlighted in the article's last quote. In a stagflationary environment, which means inflation during a recession period, if the Fed feel they are unable to cut rates until inflation has reached their target again, will Bitcoin follow risk assets lower? That remains to be seen. So what is the article saying here? Bitcoin as a safe haven against inflation has yet to be proved. The 70% rally year to date happened while the market was already expecting the Federal Reserve to stop raising interest rates. So the consensus was that between June and the end of the year, the Federal Reserve would pivot, would no longer raise interest rates. And that's exactly what's happening. So Bitcoin traders and investors might have anticipated that movement. So the question here is, will Bitcoin continue going up after the news is out that the Federal Reserve can no longer raise interest rates? Will it act as a safe haven against inflation? We don't know yet. We cannot say that because of the first 3 months rally of 70%, it works as a safe haven. It's a protection against inflation. That's not how it works. We have to wait for another 6 months to see what the Federal Reserve is going to be, how harsh the recession is going to be, so we can make a conclusion, yes, Bitcoin worked, or no, Bitcoin came back to 70K because the recession caused the S&P and stock market to trade down. So it remains yet to be proven. On today's show's second article, we're going to cover a story between Elon Musk and Dogecoin. And the article was written by Yuan Sun. Sorry if I mispronounced the name, but he's a prominent writer at Cointelegraph. Elon Musk changed Twitter icon to Doge after seeking lawsuit dismissal. Dogecoin surged more than 20% in an hour after Twitter changed its icon to a picture of the meme coin Shiba Inu. Just for those that are unfamiliar, Shiba Inu is this little dog over here that is the face of Dogecoin, which is an altcoin, one of the oldest ones, which has been sitting sideways or downward for the past 10 months. But it has always been a passion of Elon Musk, now the CEO of Twitter. So you can see here that every user saw the little dog printed whenever they logged on to Twitter. So instead of the blue bird, they saw the yellow dog, the Shiba Inu from Dogecoin. And that's what caused the pump. Social media advertising by Elon Musk. So Dogecoin is up sharply in light of the news, with the price surging by more than 22%. The icon change took place platform-wide and is directly visible by the social media giants, estimated 360 million monthly active users and visitors to the platform alike. Shortly after changing the icon, the Twitter and Tesla CEO tweeting the following meme, which appears to imply that the change will be around for some time. Oh, that's an old photo. So that's the Shiba Inu dog, the symbol of Dogecoin. That's a police officer looking at the old Twitter logo. So Elon Musk is, as usual, making a joke. You cannot read his mind or what those actions are, but we know that he has been sued by price manipulation in Dogecoin, and the article will go on to explain that. 2 days earlier, Elon Musk has asked a US judge to dismiss a $258 billion lawsuit filed by investors alleging the operation of a pyramid scheme to promote Dogecoin. Musk lawyers reportedly argued that funny pictures and tweeting words of support do not amount to a fraud claim. It appears that the reason behind the change can be attributed in part to the conversation to the administration of popular Wall Street bets on subreddit. It doesn't matter what caused Elon Musk to be changing the icon of Twitter. Even if it's directly related to a dismissal 2 days earlier, or if it's an April Fool's joke that came out a little bit late, we don't know what's the importance, what's the significance of Dogecoin to Elon. It could be a joke. He said multiple times that yes, Bitcoin can work as a store of value for a monetary replace fiat system as monetary transactions, but so can Dogecoin, because money is a social convention. And he's not wrong about that. Yes, the monetary policy of Dogecoin is kind of weird because there's infinite amount of coins. So it's printed a bunch of coins every day to pay the miners. And yes, there hasn't been any development on Dogecoin for the past, 6 years. It's merely a fork of Litecoin, which by itself is a fork of Bitcoin. So the code is like 98% compatible. It has its own network of miners. It shares those with Litecoin. They have the same algorithm for mining, so it's a shared mine between Litecoin and Dogecoin. So yes, there's a little bit of criticism behind Elon Musk's support to Dogecoin. But again, this guy is worth more than $200 billion. I don't think he'll be risking his career to try to gamble a little bit money and pump Dogecoin. He does it for fun. You cannot think that, he's going to support Dogecoin. He's going to use it for a network of payments in Twitter, the social network that he recently acquired for $44 billion. Even if he does that, it does not mean that Dogecoin will work as a global store of value, as a day-to-day payment system. Had that been right, had that argument been correct, the hash rate, the miners would not be wasting so much money, so much energy, so much time. So many developers would be building on Bitcoin, the Lightning Network, now the Ordinals. There's a whole bunch of things that has been developed, including Taproot on Bitcoin over the past 4 or 5 years, and nothing has been developed on Dogecoin. It's stagnant. There are no miners compared to Bitcoin. So investors' attention, the ETF, developers' attention, miners' attention has been solely devoted to Bitcoin, not for Litecoin, not for Dogecoin. So it's a waste of time thinking that Elon Musk could be a super intelligent human being that has studied Bitcoin for years and realized that Dogecoin was the better alternative. No, it's not like that. He's just making an April Fool's Day. So if you got 20%, 30% gains on the rally, I'm happy for you. But don't think that this could be a long-term investment. That's not how it works. Just remember, those are my own opinions. This is not financial advice. This is not Cointelegraph's official message or their views. It's exclusively my own opinion. So if we go back to the article, we can see that throughout 2021, Musk promoted the cryptocurrency Dogecoin with slogans such as Dogecoin is the people's crypto and proclaimed himself to be the Doge father. Last year, Tesla launched the new series of whistles inspired by the Cybertruck, and those could be paid in Dogecoins. But it was some t-shirts and some memorabilia. You could not buy Tesla cars using Dogecoin. So it reinforces that it's only used as a joke by Elon Musk. Okay, guys, so on to the third and final article of the day. We're gonna cover Japan regulation. The article was written by Amaka, and it goes on by saying, Japan FSA flags Bybit orders for operating without registration. Japan's Financial Security Service Agency, FSA, warns Bybit, BitGet, and others for unregistered operations as it cracks down on crypto exchanges in Japan. In a warning letter released on Friday, Japan's FSA said that a number of foreign currency exchanges have been conducting business in the country without proper registration, violating the nation's fund settlement laws. A similar action was taken against Binance in 2021. Let's take a step back over here. So what happened over the last 2 weeks? Number one, Coinbase received a Wells notice from the SEC. It was not something specific. It did not mention what product or service. It was unregistered as securities, but it was a warning note and gave the exchange a couple of weeks to prepare and defend itself. Moreover, the CFTC, Futures and Trading Commission of USA, sued CZ and Binance. So they're alleging that Binance is serving US clients, offering derivatives, and etc. So that's also illegal. The market is interpreting that an operating choke point to cut every banking, every license that crypto exchanges have in the US. So Japan's regulatory action might not be effective, as they've already tried against Binance in 2021, and I don't recall ever Binance being sanctioned or fines or whatever in the region. Maybe they have adapted, maybe they have implemented IP banning for Japanese clients. I don't know about that. But the big picture here shows us that regulators, the countries, are trying to ban the cryptos on and off ramps, meaning make it harder for the investor to convert fiat money, US dollars and euros and yuans and Japan currencies into cryptocurrencies. So they're trying to suppress derivatives markets. They're trying to suppress crypto exchange by enforcing regulation. Because right now, regulation is really unclear almost everywhere in the world. So it's a kind of a gray area. What is a security? What kind of Bitcoin and Ethereum trading product can be offered? Is the futures swap contract a derivative instrument? What kind of clients need, what kind of approval do clients need to trade those investments? Because it's easy for the regulator to say, well, you should have consulted with us, you should have requested an exemption to offer those securities. But in Coinbase case specifically, the exchange has been in contact with the regulator for the past year, trying to offer the Ethereum staking contract. They have asked multiple times, they have flown directly to Washington to talk with regulators and ask for the clearance. Are we doing right? How should it be done? The regulators said nothing. They did not approve nor disapprove. they remain quiet. So a year later, they come with a Wells notice saying something that you're doing is illegal. You gotta adapt, review your standards. So that's not how it's supposed to be working. We should be working together with the exchange to promote, to allow the correct products, the correct services to be offered to the public. And that's not what they are doing. So that's why the public is calling Operation Choke Point. They're trying to suppress cryptocurrencies. But remember, Bitcoin is rallied 70%, and despite Coinbase and Binance, the two largest global crypto exchanges, being under investigation or being sued by regulators, Bitcoin remained at $28,000. So that's a really strong message. Again, that's my own opinion. That's not financial advice, that's not Cointelegraph official message. But if you think it through, the recession risks combined with crypto exchange being sued, being investigated, getting Wells notes, and Bitcoin remained strong. So that's a really bullish indicator for me. And I think if you haven't already invested something, you should be doing DCA by a little bit every week or every month. Guys, that's it for today's show. Don't forget to visit Cointelegraph Markets Pro, the professional Cointelegraph trading and alerts platform. We've got some proprietary indicators that have been consistently paying off. There's a 20% discount in the comments. Make sure to visit Cointelegraph Markets Pro. Thank you for watching. The Market Reports airs every Tuesday, 12 o'clock p.m. Eastern Time. See you.